This is your LMAX Exchange technical update for Monday, December 12th, 2016. Euro dollar. So the euro clearly remains under pressure after stalling out by key previous support turn resistance in the 108.50 to 109 area last week, and the market now is focused on retesting and breaking the recent 2016 low at 105.05. A break below that level will expose the multi-year base from 2015 at 104.63, which below there could end up exposing critical parity further down. At this point, any rally should be very well capped, with last week's high as a firm resistance point, which comes in at 108.74. Sterling dollar. So cable has seen a consolidation off recent highs, although the market remains firmly contained to a downtrend, and while it holds below 128, that previous base, it does remain confined to that downtrend, and there is risk for another sharp decline back towards the 31-year low, that recent 31-year low down around 120. At this point, it would take a break back above 128 to take the immediate pressure off the downside. Dollar yen. So dollar yen continues with its impressive surge. The market has easily cleared barriers at 115 and is now focused on next key figure support resistance at 116. However, daily studies remain overbought, and there is risk at some point for a reversal to allow for these studies to unwind. Initial support comes in below at around 112.87, though 111.36 is now that key support, with a break below to open a more significant correction. At this point, though, the market is constructive and trading within a more well-defined uptrend, and so setback should be supported in favor of that next higher low. Euro Swiss. So Euro Swiss continues to be pressured to the downside since breaking down below a multi-week range, and the focus here is on a retest of the 2016 low at 106.24. At this point, any rally should be very well capped ahead of 109. Aussie dollar. So Aussie has seen a bit of a correction in recent trade, though overall the pressure here remains on the downside, and the market is expected to put in a fresh lower top ahead of the next downside extension below recent support, which comes in at 73.11 and towards 71.45 further down. Dollar CAD. So dollar CAD decline should be stalling out soon as the market has pulled back within a broader uptrend and is probably looking for that next higher low above 130 in favor of that next major upside extension back towards recent highs at 135.89 and ultimately towards 140 further up. Only back below 130 here would compromise the immediate constructive outlook. Kiwi dollar. So Kiwi continues to show signs of topping out in 2016, with rallies now very well capped, and the market is now focused on a retest and break below medium-term support, which comes in at 69.52, a break below which will expose the 65 area further down. SPX 500. The S&P 500 continues with its relentless push higher to fresh record highs now through next key psychological barriers at 2250, with a focus now on 2300 further up. However, this market is overbought on the daily chart and could be poised for a short-term correction at a minimum. However, we also would need to see a break back below 2180 to now take the immediate pressure off the top side. Gold. So gold continues to trade down into some medium-term support, some internal support in the 1130 to 1180 area. If the market can continue to hold above that level, there remains risk for a major base to be carving out here ahead of the next major push higher. However, if we do see a close below 1130, this will open an immediate retest of critical multi-year support from 2015, just shy of 1000. Again, if the market can hold in here, which is now on the daily chart showing oversold, there is risk for another significant bounce as the market continues to show signs of longer-term basing. If we do establish back below 1130, it shifts the structure and puts the focus for a retest of that 2015 low just shy of 1000.